What's going on, traders? Thanks for tuning in today's YouTube video. My name is Darius, and today I would like to share with you the GBPUSD, the EURUSD, and also gold. I'm going to explain you what kind of bias I have for this market, if it's bullish or if it is bearish. I'm going to show you where I'm going to have a look to take an entry. I'm going to post this afterwards in the inner circle, and yeah, we're going to rock this market to make crazy risk to reward. As you all know, I'm trading on institutions' concepts. I'm always trying to follow their footprints because this is the only reason, the only thing how you can make money in this Forex market. Okay, now keep in mind that today is Monday, and on Monday the market is always a little bit random. Of course, also on Monday the market will move like the market is supposed to be. But the thing is that on Monday, most of the institutions, they are just placing their orders. And for everybody who do not know exactly how this Forex market really moves, then make sure to watch this whole video till the end, because I'm going to explain it to you immediately. Now guys, before I'm going to start off with this whole thing over here, explaining you all the concepts, make sure to subscribe over here on my YouTube channel to not miss any new videos, because it's super important that you're going to see this video immediately after I'm posting it. If you would like to be the first who would like to see the video, then make sure to check out the Telegram channel. It's here in my link tree. The first link is the Telegram channel, and if you're wondering about how it is to trade with me, check out the inner circle, and a little bit below you have my trusted broker. So make sure to use my broker if you have absolutely no clue what broker you should do, or if you're not satisfied with your broker. Because the thing is, on the broker, I'm going to make for that also an extra video. There are so many money making brokers, and they are here to just grab your positions. They're always trading against you in order for them to make more money. And this is kind of a scam, but yeah, they are doing it in a legal way, and this is why it is still possible, because it's your fault if you are going to not be informed about regulated brokers. And this is why I definitely recommend you to trade with my broker, because if you've ever wondered about, okay, why always your positions is going to be stop hunted and afterwards you will be in pretty nice profit, then it's probably exactly because of that stuff, that the broker is always hunting your position, and sometimes you will see spikes as your broker's charts, and you would just think of, yeah, but on my trading view it's not the same price, and then you will understand that your broker is a money making broker. Okay, so this is why I'm doing right now, sending out you this recommendation, because I'm using this broker right now 2 years non-stop, and I never had any problems about spreads, commissions, or withdrawing my money. Okay guys, then I would say let's get it right into the video, explaining you right now at the beginning how this market is really moving. Now for example, this is why I'm always looking at the monthly chart, because this is super important to understand how the biggest market movers are placing themselves. What do I mean by that? Who is even moving this market? Yeah, well, those are the big participants in this game. Okay, everybody is calling them like they want. There are a lot of different names out there. Let's just call it the super bank, for example. Okay, or smart money, or the man behind the market. So a lot of names out there in this industry, and we know that there is a large group of big mans, very big mans, who are running these companies. Okay, and they are here at the Forex market in order for them to make money. Very big money. Okay, this is how it works. Okay, so this whole market over here, the Forex market, is built on those people who have the most liquidity in it, that they are going to make much more money out of it. Okay, if those big participants, if they are not doing money, why should they even be over here? Do you understand the point? This is how it really works. So the whole Forex market is made for traders, for big companies to make even more money, but you need to figure out how this really works like. And I'm going to show you right now one super important concept, because this really will change your thinking of the Forex market. I'm viewing this whole market as the big movement. So this whole movement that you can see over here from this top, to the low was made by one institution or several institutions. They're moving the market like this, right? They are doing these structures, and we need to understand what they are really doing with these structure markets over here. Everything is based on waves, okay? So you will see impulses, you will see correctives, but all in all, if you sum up all those movements, you will understand one important thing, and the thing is that the market over here is super manipulative in order to grab always the money from one person or from one institution and bring it to the other one. With that being said, finding the right decision, finding the right next potential move up on the higher time frames is not that difficult. You only understand how it really looks like. For example, look at this. Everybody knows that that's a contraction phase in this case, so it's just a ranging market. If you look at this right over here, you have a normal uptrend structure. What do you see over here? Downtrend structure, and again uptrend. The market is dropping again, downtrend over here. Okay, as you can see, it's not really difficult. This is what currently we're in an uptrend. This is what we can still expect, that the GBPUSD will go from a long-term perspective here higher. Right now you have here some structure, of course. This is why the market is giving us right now the correction, and this is why I'm expecting right now the market to go down lower. Okay, the chances for the market right now to go to the downside is super high. But we're going to feel the market like I'm feeling it like this here on the monthly time frame, also from the lower ones. Because what here really occurs is, what is here really happening at the market is that financial institutions, they are going to buy the market or they are going to sell. Everybody knows that. So you have actually a 50% win rate, right? When it comes to trading. You always have to have a 50% win rate. But you would just think of, yeah, but why do I have then such a low win rate? Even me, I have a very low win rate because I'm always planning to get these high risk reward trades. Okay, I'm always doing it like this. But if it's that simple, only 50% you need to be right and you're in profit. And let's imagine you're also super good in those risk reward trades. Then you should be crazy in profit, right? So right now, everybody will just think of, okay, what am I talking right now? Well, we do not have that 50% win rate. We cannot even have it. Of course, we can have it if we have such a strategy, but if we're going to have a strategy with an 80% win rate, then we will have such low risk reward that we're not interested in even thinking about joining the market. But there are participants in this market who have those 50% win rates. They know exactly how the market will move. And because of they know that you have always a 50% decision phase, so you always decide, should I buy or should I sell? They can sum up this whole thing ending up with 100%. Okay, you would just think, okay, crazy. They have 100% win rate. But the thing is that in order for them to get 100% win rate, they need to hold their positions that they have for a very, very long time. With that being said, what institutions are really doing in this market is they're always floating in losses and in wins at the same time with the same pair. So, for example, here on the GBPUSD, let's say a market and financial institutions, they entered here short. Let me just clean up over here, just to be really clean. For example, no, let's take this market. Financial institutions, they took short and they have been looking at it. Okay, we should close here. Okay, some of them did exactly this trade. They shorted the market and the market went like this. Okay, move up, move down, move up, in waves. Okay, we all know about that one. Now, the biggest participator in this market, they closed that trade exactly over here. They closed that trade exactly at the bottom. This is what they did. They closed positions at the bottom. But some of the financial institutions, they didn't have the chance to close it over here. Okay, they missed that one, but they do not care about that. They really do not care about that one. What they really care is when the market is approaching to move up higher, they are going to rejoin over here. They are going to rejoin. This is why you have those spikes. They needed to create those spikes in order for them to add some more sell positions. So they attracted more buyers with that potential fake move to the upside. And afterwards, the market dropped crazy to the downside. And here they closed it. Some probably even here, and then they bought the price again. So at the end, they're in profit. But they've been holding these lost positions several months till the price was back at this area, and then they were able to sell it off. Same example again. We have over here that one. They took short. Now they close at break even. Whenever they're closing positions at break even, it will always occur the exact opposite. The market will go then, for example, in this place to the downside due to that one reason. But also, smart money traders are buying, selling, buying, selling, buying, selling. But we never know exactly how far this thing will drop. Everything is based on supply demand, okay? So we never know at what kind of price they are really interested in buying or selling. This is why support resistance didn't really work. So there are so many traders out there which are thinking of, okay, I'm going to buy at the support. Yes, you can do that. But who's telling you that this is the right support? Nobody can tell you that one stuff. This whole thing is based on possibilities. This is why if you're a trader, everything is about calculating a risk. Otherwise, it cannot happen. It cannot occur. I explained to you the last week, I explained to you so many reasons why I thought about a GBPUSD should drop down, but it didn't, right? But still, the bias is still correctly, because if we have a look on the monthly, it makes sense that we're going to drop to the downside. Right now, I'm going to give you the update why I expect it should go still to the downside. We know right now from the monthly that the market should go down for a correction. It needs to give us a correction because we are here at a very significant area of supply. Smart money traders who took this position over here, they've been closing it right now of break even because they know long is the right decision. So they are going to close their short and they are going to bring it a little bit to the downside so that they can make a little bit of profit and for them to get a more cheaper price to add some long positions. This is how it really works. This is how trading really works. Now everybody for us, they just think of, okay, I need to draw my support resistance. I need to use supply demand. I need to use Fibonacci. Those things, they do not really matter. What really matter is at what kind of level are you going to buy? And this is why you should always buy the dip and always sell the top. And this kind of knowledge I'm always trying to use over here into consideration. And the thing is, because of support resistance, everybody's using them. Everybody's using trend lines. So this is why trend lines do not work like it is supposed to be. So something like this do not really work if you're using a trend line like this. And the market is moving within these trend lines. And then you're just looking for that one movement to the downside. It only works for some matter of fact. And those are if we are at a significant area where price could go down due to the higher time frames, due to the market flow, due to the waves that we have currently in. And if then the market is setting up for such a pattern, then we can use it. Otherwise, it's just stupid that we're going to do this because the setup would be a very low chance that we're going to achieve that one. Okay, I think that's enough talk about how the market really moves. I'm going right now to give you full breakdown analysis that what I see right now in the GBPUSD. Now, like I explained to you, I like to use those February retracement for additional confirmation, which doesn't mean for 100% that this market really needs to retrace to that level. But what we can see from the Fibonacci retracement is that the market loves to test those levels, to reject those levels, and this is why I like to see right now the 0.5. Okay, this is my target right now for the monthly. The weekly perspective over here is super cheeky right now because the weekly is just giving us that correction, and the thing is I don't want to see the weekly candle going above this area. If we are going to pass this high, then from my point of view we're going to go up even higher before the market will give us final correction, but afterwards I do not expect that the GBPUSD will continue to drop down. No, I expect afterwards the GBPUSD that it will continue with this bullish trend, because right now it is just rejecting the support resistance based on weekly, and this is why so many traders are right now attracted at these levels. But this is right now the thing which everybody sees, and this is why I'm looking at this market like, okay, probably we're going to really use this one as an additional liquidity, in order to bring the price to the downside, so that those big players, they can easily take advantage of it and that they can just smash through it. This is how I view it, because I know support resistance do not work. Support resistance is just, from my point of view, the biggest scam when it comes to trading. So yes, there are structural levels, but structural levels you can always identify. So it doesn't really matter if you're going to use every support resistance into consideration, because at some time it will work. Of course it will work, because smart money traders, they are going to use some structural level. But what the thing is that a lot of manipulation will happen, occur these levels, and we never know, okay, are we going to break it or are we going to respect it? Let's go to the daily. The daily is, from my point of view, super attractive that we're going to drop to the downside. As we can see over here, the market has been printed over here this nice low. Okay, so it's double bottom. Traders like to see something like this, and what I do expect right now is that the market will completely respect this area of supply. And if it will respect this area of supply, you will see the market dropping crazy to the downside, because then this is a nice source of liquidity. Price will from here drop crazy, and it will, here attract again enough sellers. Probably we will even see here some big manipulation. That's also always a possibility. Let's see, where right now facing the 4-hour supply. The 4-hour candle will close in 11 minutes. Looks super great from my point of view. Probably the next candle will spike into that level and then boom, nice drop. Okay, that's basically what I see right now on the GU. So from my point of view, this whole thing is just setting up right now for a stronger movement to the downside. Only if we're going to pass this level like this, or nice close above it, then from my point of view it will be invalid. But yeah, I do not expect that one. I can see over here the market is printing a lot of liquidity spikes, so I expect in the future that we're going to break through this level. But before we're going to break through this level, I expect the market to break this one, to give us a nice correction to the downside, and then at some point to completely reverse and to break then all these levels, because every research trader will look at these levels afterwards to sell, and this is why the market will then just simply boom, splash through them. Okay, let's go to the EURUSD. Now, the EURUSD is, from my point of view right now, also in the same situation like we have it on the GU. Now, from the higher time frame, we are respecting this area of demand. This is why the market is pushing that much to the upside, and it is completing this impulse correction and impulse pattern. This is why right now I would like to see the market going down lower, because here on the weekly you can see it pretty nice how this market has printed these nice these nice impulsive and corrective movements to the downside. And with that being said, I would like to see the market giving us, based on this impulse, only a correction. And we're facing right now the 0.618, which is perfectly in confluence with this resistance that we have over here. So remember, I'm not using support resistance right now as my mainly confirmation, but I know that some kind of structure levels will work. Okay, and in this case, it looks, from my point of view, like the support resistance could work. Of course, there's the chance that we're going to smash even higher. I'm going to show you right now something else. Look here on the daily. On the daily, everybody's looking at this level probably. or had looked at these levels. Let me show it to you. You got over here so many support resistance levels. This one, this one, this one, this one, this one, this one. So if you have a look at it, you can see how perfectly nicely the market is respecting every single resistance that I drawn over here. But from which kind of point should you know that this is the resistance which will bring that price to the downside? You can see how it reacted to it in form of a bearish candle. And this is always a sign of, okay, the market will probably go to the downside. Okay, this is how everybody's looking at it. What I'm looking for is within this candle that I got over here, I'm looking for the market to give me this nice of short. And probably we're going to even pass this weekly 618. So let me just delete everything again. Probably we will even exceed it. I don't know. I'm waiting right now for my price action confirmation to have additional confirmations, because working with the most possible confirmation that you can have is the best thing that you can do. And what we can expect over here is that probably the price will fake out, giving us some confirmation, and then we can rock it all the way to the downside for that correction. But probably the market will go even lower. This is something which we cannot say right now 100%. We need to also check out what kind of fundamental EURUSD has. I know that Euro is currently super bad, so from my point of view, it should go down right now. And we're going to always grab such a high point so that the whole liquidity is right now given. So everybody will look at this market and will say, okay, structure break here, market needs to go up higher. But it will not do it, because market is not really respecting structures. Market is respecting the market flow. And this is why the market needs to give us right now correction. This is why this is why impulse and correction patterns are the most powerful ones that we can even have. Okay, I'm looking here for a nice short on the euro, on the 4 hours, also the same. I'm going to monitorize price action within this area here on the 4 hours, so we can spot this pretty nice area of supply. Let's see how it will react to it. Probably we will get a nice entry over here. Let's see, I will send it out later in the inner circle for sure. So last pair, it will be gold. Super important pair as well. Didn't check it right now for a long time. Yeah, from the monthly, this thing is still super bullish, as we can acknowledge. Nice impulse over here. Market is just doing right now some correction. We are currently retesting here, testing some important structure level, the 0.618, which is strong level of support. The weekly is just giving us a correction based on this impulse. This is why I expect the market to give us very soon a nice correction to the downside. We can also spot here very similar to the GBPUSD source of liquidity. So double bottom, and we're going to approach right now an area of supply. And when the market will test that level a little bit deep, probably the market will give us then a nice movement to the downside. So something like this is what I do expect. Let's see guys. I would like to see the market giving us another movement probably to the downside. Not 100% sure if this will really occur, as gold is fundamental based, super bullish, super bullish. So let's see. If we're going to catch only a correction, then I'm also fine with that, or something like this before the bullish continuation would be also a possibility. Okay, yeah guys, I hope that you found this video educational, that you can take advantage of the knowledge that I shared over here with you, especially in the beginning. If you didn't understand everything that I explained over there, then make sure to check it out once again, watch it again and again, and try to figure out your own strategy based on this knowledge that I share over here on these videos. And right now in the middle you have the option to subscribe to my channel. On the right, on the left side, you have the chance to watch my education playlist, plus to watch my latest videos here on YouTube. Bye bye guys, see you in the next one.